My mission is simple, to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money, but at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy Money starts now. All right. Hello, everyone. Hey, guys. It's Barry Page with Legacy Money. Thank you so much for joining us. And I have my co-host today, Tom Young. Tom, say hello to everyone.
Hello, everyone. Tom Young, never get old.
Awesome. Well, that's why I love you, Tom. Tom has 49 years experience in the financial services business. And I'm just excited to have you on the program. Tom runs a business. He's in Pennsylvania, First Consultants Incorporated. It's a comprehensive financial planning and wealth management firm. And we're just so excited to have you here. Today, we're going to talk about how you can build your own family farm and be the CFO so you can create a 7-figure retirement account with certainty and very little risk. So, Tom, how are you?
I'm wonderfully terrific is my normal answer. I refuse to say it any other way. You know, what am I going to say? Well, you know, I'm not real good today. Don't do that. When you meet people,
I love it.
Talk to people, listen to what they say to you, and I get in their face. I say, look, you if you want to have a better day, learn to say better things to yourself because your voice has more power over you than anything else.
I love it. That's what I love about you, Tom. I've known Tom for about 20 years now. We've met through various groups and organizations. Tom is a top producer. He's also an infinite banking concept authorized practitioner, and he's the author of more than a few books. So today we're going to talk a little bit about his book, The Family Money Farm, the CFO Project, and how he helps others. But Tom, if you don't mind, could you just share a little bit about your background and how you got into this business such a long time ago?
Well, I was an auto mechanic, and my first business was Tom's Auto Body. I did auto body work, and I did custom paint work. I created pictures, painted pictures on motorcycle gas tanks, on race cars and hoods, and built racing engines. That's what I did when I grew up. You know, I started working on cars when I was about 12 years old, and that was all I knew. So I got out of high school. I went to a vocational auto shop high school. I didn't go to college. I had probably a very low self-image when it came to academics. We referred to them in high school as preppies, so I was an auto shop bum. So I graduated high school, and I think a few of them were glad I was gone. And I joined the Air Force when I was still 17. My dad co-signed for me, and my dad had an 8th grade education. My mom, I think she graduated high school. But academics was never, ever discussed. It wasn't ever an expectation to go to college because my dad always said we don't have the money to do that. I mean, those were the days you had to pay your way. Today, you know, you got student loans, and the student loans are hoping they don't have to pay them back, which is wrong. But got out, went into the Air Force, and I signed up for the Air Force to be a jet engine mechanic. That's what I wanted to work on, jet engine and airplanes. And so I went in under what they called a 120-day delay plan. And when the slot opened, they called you and you filled the slot. Well, long story short, I ended up at basic training. I went through basic training. And at the end of basic training, out of 95 fellas, recruits that were in those 2 barracks that I was in, I was the only one didn't get orders. So when it was over, I stayed on the base for 2 or 3 weeks. And then I didn't handle anger real well back in those days. And I got angry and got in trouble. I ended up in front of the commander, and that could have been the end of my military career. And it could have been a really, really big axe in my future had they drummed me out of the Air Force. I told him my story, and he told me about a test that I took during basic training. It was a big 250 question test. And then it was aptitude. It was your ability to learn things. You had to memorize things and answer questions. And he looked at me and he says, "Look, young," he says, "you're too smart. That test you took, out of 95 guys, you scored the second highest score." And wow, that it didn't register quite at that time. But I ended up being a medic in the Air Force. My two older brothers were in the military. My oldest brother was in the Army, and my other brother was in the Air Force, the same as me. I was in the Air Force, but they were in overseas. And my one brother was in Germany, the other was in Spain. So I never left the USA. I was the youngest, the third one. If you remember the movie Saving Private Ryan,
Oh yeah.
if you have brothers in the military and you're the youngest, I wasn't allowed to go overseas. So I was in a small 10-bed dispensary in New York, and we handled soldiers coming back from Vietnam. And that was a heartbreaking experience. Some of the things that I saw, that we handled and got through. But got out of the Air Force and went to work in a steel mill. Worked there for about 6 months. Then I went to work on the railroad, Conrail, and did that for a while. And while I was in the mill, I learned how to weld, and I wanted to learn something new. I wanted to be better. I wanted to be the best me that I could be, no matter what it was I was doing. So I learned all these jobs in the mill, and I was only in the mill about 6-8 months, and I went to work on the railroad, and I was in the railroad for about 2.5, 3 years. And I don't know if you've ever been around a railroad yard where they make trains up. They have this thing called a hump, and they push the railroad cars over top, and they have these retarder. They're steel beams that squeeze the steel wheels to slow the car down. It's like the brakes.
Right.
Well, those things, they squeal. And I was standing beside one of those one day, and when it squealed, I didn't feel a thing, but I went 100% hearing loss in my right ear. And so that became the journey. And they held me out of service because you weren't allowed to wear ear protection in the railroad yards because the cars roll around on roller bearing wheels. So got through that and left there. And then I started my own business, Tom's Auto Body, painting cars, doing airbrush pictures on motorcycles and building racing engines. I worked in just as I got out of the Air Force, I worked in an auto parts store and learned how to run lathes and bore engines and actually build racing engines while I was there. And then I got married and on and on. So I bought this garage and I had a mortgage on it. So I figured I need insurance. So if I die, the mortgage is paid for and my wife wouldn't lose what we created. So we called up her family insurance agent and he came to my house with the sales manager with him. If you understand sales manager, Barry. And I had one policy that covered me and my wife, and we had already found out we were never going to have any kids. It was 1,000 to 1 chance we'd ever have any kids. So I told the guy, I just want a policy to cover me for the mortgage. And he sort of alluded that I couldn't have two policies. So the older policy had cash value in it. So there was a 90-day, now you would know what I'm talking about, 90-day replacement period at that time, 6 months.
Right.
So if he would have replaced my old policy with a new policy, he wouldn't have made any commissions. So he needed me to pay the premiums 3 more months on this policy. And he said, look, I'm getting ready to retire. And if you drop this policy before 3 months, they're going to take away some of my retirement income. Honest to God, that's what the guy told me.
Right.
So I said, okay. And what he did is he paid the 3 months premium, stealing my cash value. A few months later, I got a phone call, and it was an investigator. This guy introduced that he was an investigator for the insurance company.
Wow.
And he says, nothing wrong. He says, people that drop a policy and buy another one, we want to know, what did we do wrong? And I told him this story about retirement. This agent told me. He says, Mr. Young, I think we need to get together. Long story short, they replaced everything. And what I found out later was the office in Pittsburgh where this guy was, they fired 27 agents and the manager. They had a system going on where they were just replacing policies for commissions. And so a bunch of them got fired and the manager got fired. Next thing I know, there's a sales manager sitting at my kitchen table because the agent I was with was in Pittsburgh, which was 30 miles away. And so it trickled down. So now I was assigned a local guy, and he come to see me, and sitting at my kitchen table, he said, "I think you'd be good at this." Now you have to realize it's in January. I'd sold my automobile business. I'm now working at a Ford dealership, and I'm the automatic transmission overhauler. I fix automatic transmissions.
Okay.
And in January, I weighed about 250 pounds at that time. I had this big burly plaid tan coat, and it had these big orange blotches on it from transmission juice dropping out from under the car. That's how I looked when I went to the manager's office at Prudential. When I went,
wow.
I didn't have dress clothes, and I was during the day at work, so I went on my lunch hour, and I meet the manager, and we talked, and I looked at him, and he said, he's got mahogany desk and big oak bookshelves. You can imagine what his office looked like as a manager. And he said, "You could have an office like this someday." And I looked right at him, and I said, "Don't horse beat me. I won't." Okay. And he said, No. So I said, okay. So he gave me this LIMRA test. There was 28 questions, and there was some math and psychological questions type thing. So I sit there and right in front of him, I took the test, and I handed it back to him, and he got this correction thing out, and he looked at me, and he looked at the paper, and he says, "How did you do this?" I said, "Do what?" He says, "I've been a manager for 30 years. Nobody ever got all 28 questions correct. You got it 100%. He says, 30 years. I've never had anybody ever get 100%.
So that's how you got started.
Remember the test in the Air Force?
Right.
I ended up number 2 out of 95. So now I'm starting to think a little bit different of me. And he actually offered me the job. He says, "I have no doubt you couldn't pass your insurance test. So let's start the process." So I went to a local mall over in Ohio, and I bought a couple of $40 sport jackets, and I had no dress clothes. And the one coat, it was a pinstripe, and I remember about 6 months into it, it was so cheap, Barry. The white stripes in it furred out like fur. It was a hoot. It was a hoot. So I started for Prudential in a debit operation, door to door, selling life insurance.
Oh wow, door to door. Now I've heard a lot about that.
I had a territory and door to door, and there was 60 agents at the end of the first year. I was the #1 agent in the office. I had tripled the size of my book that they gave me to work.
Now back then,
shortly after I joined the insurance business, I wrote a family policy on a young guy named John Sherbine and his wife, Beverly. They had a brand new baby that was about 3-4 months old. I found out later that John Sherbine's father was a State Farm agent, and he didn't like his daughter-in-law. So he wrote John a $10,000 whole life policy, did not write anything on Beverly or the baby or anything. I wrote a family policy. So it was $10,000 on him, $5,000 on the wife, and $5,000 on the baby. So about 3-4 months later, I'm sitting in the office one day and a phone call, and I walked in, and Don Workley, the guy was my sales manager. It was a big bullpen office, if you know what I mean by that. Big room. Yeah. Everybody was in the one big room. We had a Friday meeting. So I come in the door. It was like a Tuesday or Wednesday. And Don was sitting there on the phone, and he's got big alligator tears running down his cheeks. And I looked at him. I said, "What's the matter, Don?" And he said, "That was your client that just called. He just told me their baby died."
Oh, wow. Yeah.
I told you about my emotions. They're still there. I had to go to that apartment and deliver that $5,000 check. It had nothing to do. It was the hardest thing that I've done in 49 years to go there. There wasn't any words said. I laid the check on the table. Now, I found out later, Beverly didn't speak a word for like over 3 months. They ended up divorced over the whole thing. But that was the beginning, and settling that death claim, it just gave me the feeling of power that only God would have to be able to create something like that. And then I got hooked up with Ben Feldman. Do you remember Ben Feldman, Barry?
Oh, absolutely.
Hey, the Feldman Method, the book. And actually, Ben Feldman lives. At that time, he lived in East Liverpool. It was 30 minutes from here.
Oh wow! Now most people don't know who Ben Feldman was, but
Ben
he
Feldman
was
was
the
in his book of records.
biggest producer
sold
ever.
more life insurance in 1 year than anybody
ever.
Right.
Yeah.
And so one night I went on an appointment and knocked on the door. The curtain moved. I don't know if you ever had that experience. You go to somebody's house and you see the curtain moves. You know they're there, but they never answered the door.
Right.
So I got in the car and I left. And I'm thinking in my mind, this is baloney, because everybody at the office is talking about Ben Feldman this and Ben Feldman that. And I said, darn it, I'm going to go find this guy. So I drove. It's like 7 o'clock at night, summertime. I drove to East Liverpool and I found him. I found his address.
What?
I found his address, went and knocked on his door. And that day, his son, Marvin had their first child. Okay.
Wow.
They were on their way to the hospital to see their brand new grandchild. And so I didn't, he invited me in. He says, look, I only have a couple of minutes, but come in and we'll talk. So we sat down and I told him a little bit about how I got in this and started. He says, do you want to be good at this? I says, this is the opportunity of a lifetime to me.
Right.
Coming from where I came from and my background, I would do whatever anybody else wouldn't do. I would do it all. Whatever it took, I was going to do it. He said,
amazing.
If you want to sell a lot of it, he says you have to own it.
I hear you.
So
man, I
bought my first $100,000 policy the next day.
That's incredible. That's incredible. That's a
year
great story. I had no idea that you had actually met Ben Feldman.
Absolutely.
But that's a great story. Tell us a little bit about. I'm sorry.
The one that had the baby was Richard. Marvin, I still see at MDRT. I'm top of the table. So, I mean, I go to the meeting and I see Marvin. He's actually, if you look in my book, he's one of the people that actually signed my book, Marvin Feldman. That's Ben Feldman's son.
Yeah. Yeah, I saw it. He's
one of the endorsers of my book.
Yeah. Yeah. Yep. So this is your book. And obviously you've been in the business a long time, nearly 50 years. So, I've been seeing you for about 20 and, I'm just always amazed at your energy. You've been, you're into a little of everything, but you just mentioned some of your accolades, the $1 Million Roundtable and such, which I've been a member of as well. But you're top of the table, and you didn't. I'm almost embarrassed because you didn't put your initials, and you have about as many initials as anybody. So, talk to us a little about those initials that you have. Which initials are you most proud of?
The one that I'm most proud of was the first one, the COU.
The COU.
That was the first one.
Chartered Life Underwriter.
Chartered Life Underwriter. And then the second one I got was the Chartered Financial Consultant, CHFC. Now, today you hear the CFP. Everybody talks about, are you a certified financial planner?
Right.
Well, you know what? I'm twice, because the first 5 courses of the CHFC are the CFP courses. 5.
Right.
The CHFC is 10 courses. So I took all 10. So I'm a master's degree over and above the CFP program. First 5 courses of the CFP are the same first 5 courses of CHFC.
Well, speaking of that, let's kind of jump into how you help people with their financial plan. If you were meeting, with a family for the first time and they had kids at home, what are you typically going to talk to them about?
I have a process that I have developed. And my first meeting with everybody is really about why people are failing. There was a story that I heard 49 years ago. It was called the 100-Man story at that time. I don't know if you ever heard it. The Ivy League colleges took 100 young people at 25 years old and they interviewed them and they talked about their dreams and goals. They went back to find them at age 65, 40 years old.
Right. Yes.
Now, this is the Bureau of Labor Statistics. That's where these numbers actually come from, the government.
Right.
One was rich. 4 of them were doing okay. They were living okay. 5 were still working because they couldn't afford to quit.
Right.
They just couldn't afford to quit. 36 have died, mortality, we're familiar with that. And 54 of them were dependent on other means for their daily, everyday survival.
Right.
That statistic is no different today than it was 49 years ago. Now, let me ask you a question. If you're a prospect, you're a new prospect. Do you have a 401k, Barry? And most everybody's going to say yes, right?
Yes.
I have a 401k, IRA, whatever. I says, do you understand how it really works? Well, he says, yeah. He says, I put money in there and I don't pay any taxes.
Yeah.
I says, well, can I ask you another question? Are taxes in the future going to be higher, the same, or lower than they are today? How would you answer that, Barry?
I don't know. Maybe probably higher way things are going.
Okay. Now, you've been in business 20 years. When I started in the business, we used to go sell IRAs to people. You know what we used to tell them? We'd say, look, when you retire, you're going to be in a lower tax bracket.
Yeah, that's what I've always heard.
Now, do you want to be in the lower tax bracket when you retire, Barry? That means you're broke.
Yeah, yeah.
Because if you look at the tax code today compared to 40 years ago,
right,
to go from one tax bracket, 15% to 21 to 23, it's like $60,000-$70,000 difference in income to go to the next level in the percentage. Right. So let me ask you a question, Barry. When you retire, how big of a lifestyle reduction are you willing to accept to be able to retire? And the money.
I don't want to have a reduction. Yeah, I don't want to have a reduction. Yeah, that's the golden years, right? I want to go play golf and go on vacation, right?
I want to be in the highest tax bracket of the land, and I do pretty well. You know, I don't want to be in a lower tax bracket. If I'm in a high tax bracket, it means I made some money last year.
Right.
That makes sense?
Yeah.
My wife is still Milltown mentality, and I do pretty good. And she'll say to me, why do you make so much money? You look how much money we have to pay in tax. And I said, well, now, wait a minute. Let me get this straight, dear. You don't want the dollar because you got to give 33 cents to Uncle Sam. So you don't want the other 66 cents or 67 cents. Is that what you're telling me?
Yeah.
Let's put it in proper perspective.
Right.
Because really what it is the financial world has you snowed. They guarantee your failure at success because they do not teach how to make money with money.
Right.
They only want you. There's 4 rules. Now, you know, all these initials after my name. Here, let me say this. How did I get those or why? Because every 2 years I have to have 24 credit hours for my license. Agreed? Yeah. You have the same thing. Well, I could take $100 open book test and get credit hours. But remember, I said, I want to be the best I can be at what I do. So I always took college courses at American College. That's how I got all the initials after my name. And the last one I got was the RICP, Retirement Income Certified Professional. And I just got that 2 years ago. So education doesn't stop. You're either busy being born or you're busy dying.
Right.
The only way to stop is when the Lord calls.
There you go.
Something else for you to do, hopefully.
Yeah.
That's when it changes. But until that happens, you have an obligation to you, your family, to your clients.
Yes.
How could I quit after what I've learned in 49 years? How could I retire and walk away from my clients that have depended on me? They have followed my prescription. And I now see clients 20, 30 years that it worked. What I was teaching worked. And
it's the best feeling, isn't it? It's definitely the best feeling to be able to spend some time, you know, with people that you've helped over the years, 20, like you said, 30, 40 years for you now. So
in my book, there's 4 stories in my book, 4 different blue collar, white collar, gray collar, and 2 PhDs in the book. Now they're both doctors.
In the Family Money Farm.
In the Family Money Farm. Now, your listeners out there, if you want this book, you can get it for free if you go to cfoproject.com. There it is.
There you go.
You go there, put in your name and email address. I don't sell them to anybody. You'll get an email with a link in it. You'll be able to download this book cover to cover and my other new book that's an ebook, Financial Mastery Coaching, The Blueprint. And these two books will give you the entire blueprint to start week by week to build real wealth and stay in control of your money. So the financial world has 4 rules. I want all your money, more ongoing, keep forever, give back as little as possible. And after all the education, what I learned is they were teaching me and coaching me to be a gatherer of money for them. Barry, wouldn't you agree with that? I mean, you do this. We gather money. If we follow the typical method, I put on my financial planning hat, the one that they taught me. It's gathering assets for the financial world. Oh, don't worry. Just go on and do that. And you're putting all you can in your 401k. Young couple, 35 years old, got 2 or 3 kiddos. They're maximizing their 401k. They have a term insurance policy that's going to run out before they do. And they have to borrow money at the bank because they're putting all their savings in an account. They took money through it as far as they can into the future with very little access to it, without taxation and probably severe penalties. So when they need to make a capital purchase, they got to go to the bank. Well, bank is connected to Wall Street and the financial world, so they're buddies. So based on what the financial world taught you, you're playing both cards of the game. You're playing the financial world's game, and then you're sending the clients to the bank. And if you're 25 and you get a car, you get your first real job, $25,000 car, and today that's not an expensive car. You finance it for 60 months.
Can only find a used one for that.
That's about right. So you finance for 60 months at 8% interest. Your monthly payment is $507 a month. At the end of 60 months, you've paid your $25,000, but you paid $5,300 in tax, $5,400 in taxes to the bank, or interest to the bank, not taxes, in interest to the bank. Now that money is gone forever. When you lose money, it's gone forever. So that means it has opportunity cost for your whole lifetime. So that first car at 25 years old had a $5,400 interest loss. That projected to your age 70 is now $253,000 of loss. And if you project that 20 more years till you die, it's actually almost $700,000 for that one car. So the bank made $700,000 off of you by that one car you bought.
And that's only a $25,000 car, huh? So the cars today, 50, 80, 100,000.
Barry, now most families have 2. The average is 2 cars.
Yes.
So let me just a quick story about the 2 PhDs in the book. Okay. I met them about 22 years ago. They were new doctors, husband and wife. He's a pediatrician and she's an internal medicine. She's actually my personal physician today. Okay. So they came into the Valley. They bought a house. They put a big down payment down. Yep. Then they turned around and got a home equity loan because they decided they needed to remodel some stuff. They each had a car loan, new cars. They had $180,000 in student loans. And they had 3 credit cards that had ongoing balances on them they weren't paying off monthly. Mm-hmm. So when I met them, we sat down and laid out a plan. And the first thing we did is I refinanced the mortgage. Fortunately, the interest rates were reasonable back then. So we refinanced the house. And I don't remember, it was $30,000, $40,000 of capital we got out of the mortgage. And we used that to start paying off some debt. So the monthly debt payments that we paid off and freed up, we actually bought life insurance. Okay. And then we started the plan of, and I actually refinanced the house 3 times over the last 20 years. So here's the end story. Today, they still have a mortgage today. Okay, their mortgage interest rate right now, I think it's 4% is their mortgage today. They have a son that is just finishing his 2nd year in college. And his college is $90,000 a year. He's got a $30,000 full scholarship that they got to put up $60,000 more. I remember sitting with them and talking about how they want to know, how am I going to pay for college? Well, right now they each have 3 whole life policies, and there's about $1 million of cash value in those 6 policies. Each of them are insured for about $3 million economic human life value. And they've been paying the premiums and on and on. So now the son comes along and I said, we're going to borrow from the insurance company and use your policies as collateral to pay for college. So when your son gets out of college, whether it's 4, 5, or 6 years from now, I mean, he's going to be a professional or some kind, lawyer, doctor, whatever. And then he's going to go to work and he's going to pay you back. Because if he didn't borrow the money from you, he would have loans at the bank or the government, correct? Agreed?
Right.
So now he owes mom and dad $200,000-300,000. And is he going to be bummed out with that after I meet him and explain to him that, look, this is your 401k payment. You're going to pay the loans back to mom and dad. And mom and dad, if they die at age 85, life expectancy, those death benefits on those policies on each of them will be over $6 million each.
Wow.
Now, he's got a sister that's 2 years younger. She's just starting her first year of college this year. But she has a full scholarship. She has a music full scholarship, 100% pays it all. So now he'll be 52 years old when his dad and mother are in their mid-80s. Mom and dad die. It generates a $6 million death benefit, absolutely tax-free. Do you think that could be matched with his 401k, Barry?
Wow. Yeah. I mean, there's a lot of things that could happen with that. But
I mean, if you want to put money in a plan that guarantees you in your 50s $6 million plus.
No, couldn't do it.
You couldn't create it tax free.
No.
I mean, and now he's going to get married and he's going to need to buy a car.
Right.
Well, should he go to the commercial bank or the family bank?
The family bank.
Keep control of the money.
Exactly. So, Tom, you're talking about a story right out of your book, The Family Money Farm.
Yep.
And it's called the CFO Project. Yep. And, you know,
what's the CFO? What's a CFO, Barry?
The Chief Financial Officer. Talk to us a little bit about that. How can somebody become the Chief Financial Officer? Are you talking about a business or what? How does that happen?
Every working person on the planet has a financial business at home. True.
Right.
You trade time for money, right?
Right.
And it's your job to do what? Manage it, invest it, and create with it.
Yes.
But the financial system, Barry, you've been here 20 years. Where does the financial system teach anybody how to create money?
They don't.
Doesn't exist. And the only way to create money is like Ben Feldman used to say when he would go into a business and they'd say, what do you do? He says, well, I sell money.
Yes.
3 cents on the dollar. And after a while, we'll give you your 3 cents back. How much would you want to buy today?
Right.
That was Ben Feldman. That was it. And when he went into a business, he already had a Dun & Bradstreet report. He already knew more about your business than you did.
Yes. Yes. So, Tom, tell us about, so you've been in business, if you've been in this business 49 years and you were in the auto business, I mean, what gave you the confidence to go into business in the first place? I mean, you were in the Air Force and, you know, but you're in business and you've been the CFO, the CEO of your businesses, right? Are you the sole owner?
Absolutely. Absolutely.
Yeah.
Now 35
How can
years
a normal family do that? How can a normal family start a business?
You start out first. You create a roadmap. In other words, you have to create the picture in somebody's mind. In other words, is this really possible? Because the first thing is belief.
Right.
If you don't believe, Barry, nothing's going to happen. So remember that first meeting I have with people, I use a lot of examples. I talk about the financial world. I talk about the lost opportunity on money when you borrow at the bank and do that kind of stuff. When your 401k. I mean, I've never had anybody challenge me with my 401k talk. You put money as far, you're throwing it into the future, and tell me what your dollar is actually going to be in purchasing power. You talk about taxes. Tell me what the dollar is going to be worth 30 years in the future. What was it worth 30 years ago compared to today, Barry?
A lot more. People don't quite understand the inflation, the stealth tax, right?
Absolutely.
And so, there's a lot of uncertainty there with qualified plans you're talking about, 401ks, IRAs. And we're not suggesting, I know you manage some money too, don't you, Tom?
I do not manage money, Barry.
Okay. Did you in the past?
I'm a licensed fiduciary with a Series 66 license. But I gave up the broker dealer and I work with an RIA, and that allows me to utilize. I have two money managers, one in Atlanta called Howard Capital Management, and the other one is Flex Plans in Detroit. They manage the money. I'm the coach, Barry. I find the players to do the work that we want done.
Right.
Barry, how many people have you ever met in the financial world, whether with Jenny Scott or whoever they're with, that really knew how to manage people's money and make money?
Right, right. Well, that's what we're talking about, and that's why I ask you that question. Do you think people, the average family, need somebody to manage their money? Because most of them they're paying fees for those 401ks, those IRAs, and the like. And do they really need that?
Here's the difference, Barry. You have passive management of money, and you have active management of money. Passive management of money, and I know you do deal with securities also. You have to do a suitability test, right? You have 15-question suitability to find out whether they're into growth or conservative or balanced or whatever their category is, and then you find investments that match those categories, the suitability category of the client, and so whether it's mutual funds, and I did American funds for years, and all of that stuff. But once you put the money there, then it's sit back and it's wait, and you watch the market go up, you watch it go down, and the answer is always, oh, just hang in there. We're in for the long term. The market's going to come back. The market's going to come back. Now that's passive management, and I've met a lot of people that in 2008 lost 30-40% of their money. 2000 and 2001 lost 40-50% of their money. And I've only been into the active management of money probably the last 8 to 10 years. Here's an example. When COVID came in 2020, in March of 2020, the market tanked by over 35%. Do you remember that?
Yes.
Okay. My managers, both of them, they were in 70% cash the middle of February. So I had no one that lost more than 10 or 12% of their portfolio value. And then once the government started throwing money at the marketplace, well, we wrote it back up, and average, we made 15 to 20% rate of return on our money that year.
Right.
But that's active management. In other words, you give somebody with credentials that has a track record of managing money and has a philosophy of how to avoid the big losses. Don't ride it to the bottom. Passive management rides it to the bottom. Right. Or you become the typical investor, and you know what happens? When the market starts tanking, you get out at the bottom and you take all the losses of your money, and then the market starts coming back up, and you wait and you wait and you wait, and the market is now back at the top, and you say, now, oh wow, I got to get back in. So they got out when it was down and they got back in when it was high. How can that turn into making money?
Right. No, exactly.
So I'm the coach. I find the people to do what we need done for the client.
Absolutely. So in all your years in the business, I'm sure you've seen plenty of stuff, people that have lost money. You were just talking about the ups and downs of the markets. I mean, how does that impact somebody that, let's just say maybe they're retiring and the market goes down 20, 30, 40%. What's that going to do to the retirement that they've expected?
You tell me. You tell me, Barry. I don't have, knock on wood, the clients that have followed me and listened to my coaching. I mean, we've had losses, 8, 10. I mean, even right now.
So what do you do specifically? Let's say somebody has a typical American family. They've got an IRA and they want to read your book. So what do you share with them in the book that's going to help them, increase their retirement and take less risk, as you mentioned? Tell me about that approach.
First off, you have to realize that playing the game the way you are told to play it by the financial world, you're going to simply end up as the average person out there. There is no win by playing the game the way the financial world plays the game. And then you get into I have a diversified portfolio. Well, you aren't diversified. I have stocks and bonds. Yeah, that's not diversification. You need non-correlating assets to truly be diversified. Well, what do you mean, Tom? Well, that means you need money in other places that aren't tied in any way, shape, or form to the stock market or losses. Places where I can put money where I'm guaranteed I'm not going to lose anything. And I have access to that money. Access to capital is the biggest key to everything. My 4 rules that I teach in my book, number 1, the goal is to save 20% per year of your gross annual income. How many people do you know, Barry, save 20% of their gross annual income?
Very few.
Very few. Well, the financial world always told everybody was 10%, wasn't it?
Right. Yeah, that was supposed to be enough. Will 10%? Will 10% do it?
With saving, and tell me you've ever met anybody that saved 10% religiously ended up well off.
Very few. Now, a lot of people do save with their IRA, their 401k at work. So that comes out. They don't see that money. But let's just say somebody's doing it, but they still have concerns, right? They've learned that, hey, I do have to pay taxes on that money when I take it out, right? And let's just say they're getting close to that point, so they're concerned. What can they do specifically? How can life insurance maybe help them in that situation?
Well, when I take distributions, when people in their late 50s and early 60s, and I put together the movie, I call it the movie. Okay, right. I have software, Circle of Wealth, and you know what I'm talking about, and with the GPS. I like that GPS because you think of GPS that finds where I'm at, you know?
Yeah, financial GPS.
I can actually in 30 minutes create a retirement plan to show you where you're going to run out of money at. Yes. And then it really comes down to what are the other things that we can do. I have a video out on YouTube. It's been out. I created it in 2019. I don't know if you've ever seen it. It's called The Wicked, Wicked Game. Have you seen that video?
I don't think so. I know the song though, Wicked Game. That's Chris Isaac.
No. This is on YouTube. You go Wicked, Wicked Game by Thomas W. Young. You got to put it in there just like that because you're going to get a bunch of hits. And it's a 55-minute video. Okay. And it's the old A-B story. You remember the A-B story?
Person A, person B.
When people look at that, I had one guy, he come in for a first appointment. And when he left, I said to him, his name was Jeff. I said, Jeff, I says, if I send you a link to a video, will you take the time for you and your wife to watch it? He said, yeah. I sent him the link to the video. He come back in the office 2 weeks later. He walked in the door and he says, I guess you want me to buy life insurance, don't you? And that turned into a $10,000 premium on him and his wife both. Oh, he's an engineer with FedEx. And his wife's a school teacher. So people are not getting the real picture. Let me call it that. The real picture. Reading words, people aren't going to sit down and read on and on and on. I've given my book to a lot of people. I have a few people that have called me back and made comments, about what they learned out of my book and what I said in the book. But the average person isn't going to read much. If I can get them to watch a 55-minute video and I tell them this will change your whole philosophy about your future, because the first part of it is about the government debt. Now, here's the kicker, Barry. I created this video in December of 2019. Do you know what the debt was in America in 2019? It was 21 trillion.
21 trillion. That's a big number still. Trillion.
And now it's going on 37 trillion. It's 5 years later, 6 years later. The unfunded liability, which now the U.S. debt clock, they took this number off. They don't show it anymore.
Exactly.
The Social Security, Medicare Part A, B, and D, and all the pension and benefits for all the government and the military, the 2.3 million employees of the government and the military. And that number, the last time it was on there, was $226 trillion.
It's unreal.
That's the Office of Budget and Management. That's the net present value of what is promised to be paid out in the future. Now, you're going to tell me you think taxes are going to be lower in the future than they are today?
Well,
my plan. Do you want to plan on lower taxes, or do you want to plan on building a plan that avoids the government and keeps you out and away from the taxes and possibly create tax favored or maybe even some tax-free income at retirement.
Yes.
Would you be interested in that?
Oh, absolutely.
Then I'd like you to fill out a questionnaire and come in for a 45-minute visit with me, and I'll make you 2 promises. I'm not going to ask you to buy a thing, and there won't be a second appointment unless you desire it. It's that simple.
That's simple, huh? So if people want to, is the best place firstconsultantsinc.com or the CFO Money Project?
Well, the firstconsultantsinc.com has a lot of information in it, but there's also a link there for cfo-project.com right on the front page.
Okay. Yeah. So we'll just send them there. That's your business. And I sure have enjoyed speaking with you and hearing your stories of how you help people, Tom. I know there's got to be some challenges for you, just like there might be for anyone starting a business. What kind of challenges have you had in your business? I know you recently went through some health issues. Tell us a little bit about that.
Last week, August, I played golf Monday afternoon with some guys I play every Monday with in the summertime. And I shot a 42 for 9 holes. If you're a golfer, it was fair. It was pretty good.
Yeah.
But I didn't feel good. I didn't have any pain. I felt odd. Let me say that. I come home, I get up in the morning, and I showed you the picture earlier. I work out every day. And I get up in the morning and I come down here to my office. That's where I'm at now. You're just seeing the one end of it. This is a 13 by 33 room that I'm sitting in down here. So there's more room over here. And I have a full bath behind me in my office here. And I get up in the morning, I come down here to work out. And I had no pain. I didn't have it. I just felt odd. And I went up to my wife, who I've been married to for 56 years.
Awesome.
April 12th, it was 56 years last month.
Congratulations.
And I told her, I says, I don't even know why, but I says, I think we need to go to the emergency room. The hospital is like 2 minutes away. So it was a 5-minute drive to the hospital. And I went in and I told the kid what was going on. And next thing I know, I'm in the back and they're taking my clothes off and here I am. And they did a heart cath the next day after they admitted me. And I was 75 to 100% blocked in 5 arteries. If you understand, there's only 5 arteries. Okay? Yeah. There's only 5 main arteries on the heart. Yeah. And all 5 of them were 75 to 100% blocked. So I get pretty emotional. They start explaining to me how they're going to saw me open and spread my chest out. And, maybe you have to stop my heart in order to do all these bypasses and grafts and everything they got to do. And I'm getting really, emotional and trying to reach out for the Lord above to put my faith in him. The next morning, the surgeon comes in. Now, I don't know whether you like Donald Trump or don't, but I'm sure you've heard of the MAGA people and you've heard of QAnon. Yeah. I mean, that's a known thing out there. Well, the doctor came in on Wednesday morning and introduced himself. His name was Dr. Q. I said, thank you, Jesus. And it was just instant. 95% of my trepidation went away.
Oh, wow.
I did the surgery on Friday, and I was pretty fit even then. And the surgeon, that when he came in after the surgery, was 8 hours. And he said, he says, I didn't have to stop your heart. He says, your physical health was a big, big plus. And that was Friday. I went home Wednesday for open heart surgery.
Wow.
Now, and I had challenges with getting my heart back to normal. When they do open heart surgery, your heart doesn't readily go back to normal. So I had to have heart conversions with the electric paddles, and I had that 4 times. And the 4th time they did it, they left me with this. So I can make a fist, move my fist. I can't open my fingers. That's what I actually had a big burn mark on my chest where they did me with the paddles. But it is what it is. I'm here. I'm alive. I feel wonderful, and I feel blessed from the Lord. Now that was just. But 35 years ago, I had a sheriff show up at my door on a Saturday morning, and this story's in the introduction in my book. Served me with an $800,000 lawsuit. And all of the charges, there were 27 charges and every one of them was criminal. Fraud, theft, RICO Act, and
What?
no, I'm telling you. And so I had to go to the courthouse Monday and sign papers and actually pick up the documents. I called my E&O company and our professional liability insurance, and
Yeah.
sent the paperwork to them, and they sent me back a nice letter denying me coverage because it was all criminal. And I said, you already assumed that I did all this stuff that they charged me with, so you denied. I had to go put up $10,000 in as a retainer to hire another attorney that actually went after the E&O, and the E&O finally took the case. And so 3.5 years, Barry, I didn't know whether I was going to go to jail, whether I was going to have a business, or whether I was ever going to be in the insurance business again. I lost my confidence. And at the end of 3.5 years, when I went to the deposition, now the client was referred to me by my CPA. And I don't know whether you've had those kind of referrals or not.
Oh, yeah.
My CPA had a son who did not have a college degree. And you know, when if you're familiar with a private placement investment,
Yes.
you have to be a millionaire. You have to have $1 million in net worth or make 200,000 a year income to qualify.
Right.
But all of those plans had 35 slots for non-approved people as long as they had an advisor, a professional advisor, sign off.
Yes.
And that my CPA son signed off as the advisor. Now, when this client came to me, I got all the documents. I won't even talk to people unless you bring your questionnaire and you bring me copies of everything. Okay?
Yes.
So I had a copy of this private placement, which was a financed private placement. Long story short, 3.5 years later, I'm $500,000 in debt. I borrowed money everywhere. I maxed out credit cards because I didn't work. I couldn't make any sales. I lost all my confidence. And I joined the Amway business. Crazy as that sounds.
Yeah.
And I met a guy named Jody Victor, whose mother and father were two of the original 9 people that created Amway and Nutrilite in 1952.
Yes.
And I met Jody, and nobody knew this stuff that I was going through. And I remember going to a meeting in Ohio, and it was his dad's house. The garage had 6 Cadillacs in it, and there was a meeting room above that sat 150 people.
Wow.
So I'm a front row person. I go upstairs. I met Jody coming in the door, but again, he didn't know anything at all about me, and neither did Dr. Leposki, the guy that sponsored me into Amway. Nobody knew about the financial stuff that was going on.
Right.
I go down the front row, and I'm sitting in the third seat back and in the aisle, and Jody got up to talk, and he starts to talk, and I don't know how or why he looked right at me, and he said, sometimes people just need a hug. He stepped off the stage, picked me up, gave me a hug, and I broke down. I bawled like a baby. I still get emotional when I tell the story.
Yeah.
That was the turning point, because that night, going home in the car, was an 1.5-hour drive back home. And I didn't want the Cadillacs. I didn't want the big house. You know what I wanted to be, Barry? I wanted to be the kind of man he was, to change people's lives. That's what I do.
Wow. That's a great story. That's a great story. And, you know, Tom, that's what I've always loved about you. And, you know, now that you've experienced, you know, some health issues, you know, I know you're starting to think about that. Tell us, I mean, how do you want people to remember you? What your legacy, Tom? What do you want people to know about Tom Young?
What do I want them to know about me? I just spend every day of my life trying to help other people. I have a great lifestyle. I don't want any more. I don't need it. Don't need any more. And it just keeps getting bigger and better. Last year was actually the best year I've ever had in my career. And even it's another funny story from the Lord above, because in June and July last year, Barry, I had a couple of the biggest cases that I've ever had in my 49-year career. So I had a huge flush of capital in my business accounts. When August happened, and I got down for 90 days. I mean, I couldn't drive a car. I was down for 90 days. I hadn't had those two big cases in June and July, I don't know how I would have survived financially running an office with 2 office staff and all the expenses of all that and everything else that was going on. So I know the Lord had a hand in everything that was going on. And I believe he has a purpose in my life. That's why I'm here. Right. And I start every day, what do you want me to do today, Lord? And when people come in my door, I just look at them. How can I help them? It isn't about selling them something today. Those days are gone. I don't even ask people to buy anything anymore. When I go through my process, I find that people want what I got.
Yes.
I don't have to ask them to buy anything. They want it. They want the picture that I can paint for them in their mind.
Right. That's awesome, Tom. So I appreciate you sharing all that with us from the heart. It really means a lot. And that's what this show's all about, is helping people to live more and give more and leave more later on. And I know that's what you do to help people. And we're so glad that you joined us today.
Barry, kudos to you. I've known you a long time. And,
yes.
and you have an unbelievable reputation in the business. And I know you have the same heart and the kind of things that we're talking about today. So, people are listening to you. You need to go see Barry.
Well, thank you so much,
Barry. And I'm available. You can find me. I'm easy to find. I got 750 podcasts out there. I've been on radio since 1987. And the last several years, the radio show WBVP, WMBA is the radio show, and they do live Facebook. So there's all of the radio shows are out there on Facebook. If you go to WBVP, WMBA, so all that's out there, and I put it on Facebook myself.
Yeah,
it's really about helping people find the correct path. Like Robert Frost's book, Barry, The Road Less Traveled.
Yes.
If you don't find the road less traveled, which is what you and I help people find,
yes,
you're never going to find any real measurable success.
Yeah.
It's all about the road less traveled. You're doing what everybody else is doing. You're only guaranteed to get the average of what everybody else got.
Exactly. Well, thank you so much, Tom. And thank you out there for joining us today. If you like this video, we'd appreciate a thumbs up. And you can always subscribe to our channel. And if you need to get a hold of Tom, we'll put all of your information in the show notes, Tom. Cool. In case you're watching this on the replay, just take a look at the show notes and you'll see all the links there. But thank you so much, Tom, and everybody for joining us. Y'all have a great day, and we'll talk to you real soon.
God bless you.
God bless you. Bye-bye.